Welcome back, everyone, to Not Your Advisor with NYU Grad. It is Tuesday, April 30th. A lot to cover today for both free and paid. As usual, let's start with the breath readings. So, for the session, we had 143 new highs versus 174 new lows. Really close, but new lows wins. We had 17% of stocks advancing versus 79% declining. And when you take a look at the 50-day, you have 70% now below the 50-day. So some deterioration after a bounce. And 42% of stocks below its 200-day moving average. Now, going into the mega cap, everything sold off in the afternoon. In the morning, there was some data coming out on hot employment salary / wage numbers, which were inflationary, which caused some selling in the morning. It recovered, but in the afternoon, things just got really ugly into the close. So I'm not going to go through all the mega caps, but I'll just do a sampling. You have Microsoft down 3.21%, Apple down 1.83%, Google down 1.94%, Meta down 0.57%, Nvidia down 1.54%, Amazon down 3.29% during the cash session. That's not numbers after their earnings report. Tesla pulls back down 5.55%. Then you had a ton of names in the semiconductor group that were red. A lot of the software and I would say growth names like CRM, Uber, ServiceNow, they're all down. Looking at sectors, it was a bloodbath. Everything was down. Healthcare was down marginally at 0.06%. But what led to the downside? You had energy down 2.79%, basic materials down 2.45%, consumer cyclical down 2.44%. Tech was down 2.14%, consumer cyclical down 2.44%, basic materials down 2.45%, and then I mentioned energy down 2.79%. So pretty bloody day in the afternoon. I want to insert a clip real quick.
The real question is, who are we selling this to?
Same people we've been selling it to the last 2 years, and whoever else will buy it.
But John, if you do this, you will kill the market for years. It's over. And you're selling something that you know has no value.
We are selling to willing buyers at the current fair market price, so that we may survive.
You will never sell anything to any of those people ever again.
I understand.
Do you?
Do you? This is it. I'm telling you, this is it.
Powerful scene from the movie Margin Call. If you've never seen it, I highly recommend it. But yeah, I mean, let's peel the onion on why I'm sharing this, right? So one of my mentors taught me, and I've said this before, that he taught me that all stocks are sold. And it took me a while to figure out what he meant. But basically, that clip from Margin Call summed it up. So if you take a look at the way the markets are structured with the buy side and the sell side, and how financial institutions and banks are all lumped into one, quite oftentimes, even when they're separated, they're really not. it causes me to kind of pause in the recent activity that we've seen over the course of decades, but recently, like last week, it just smells to me. I've seen enough of these that the sell side is selling furiously into the market for all of these positive news pops since the whole Meta news event, and then the Tesla China news on the robo-taxis, and then the Google, and then the Microsoft. And it just seems like they're selling into every single pop or rally here. And let me kind of peel the onion here. So the last time I had posted about Apple being the most dangerous stock in the world was like December 27th of 2022. At which time, if your memory can serve you in this recall, the markets were at the edge of a cliff. And Apple really was about to go south hard. And then I kind of shared the data of how many ETFs held Apple at the time, and how many ETFs had Apple within its top 15 holdings. So back in 2022 of December, 535 ETFs held Apple. 291 ETFs had Apple in the top 15. So let's fast forward to today, April 30th, 2024. We have 1,004 ETFs holding Apple stock. 351 of those have Apple in their top 15 holdings. Now, I'm not going to go through all of the Mag 7, but I think you can get my drift here. If you own this much of Apple, Tesla, Microsoft, Google, Nvidia, how can you unload your positions if you are Wall Street, if you are friends of Wall Street, if you're a government official? You pitch stories, and this is why stocks are always sold. You know, you're going to hear things like this so that they can sell before the riffraff, you and I. Buzzwords or headlines that read soft landing, no landing, perfect deleveraging, 6 cuts on the dot plot going into the Santa Claus rally. AI everywhere. 3% unemployment, that's not bad. The strong consumer, cash on the sidelines. Announced dividends, announced buybacks. Say AI 90 times on your earnings call. Say Nvidia on your earnings call. Announce a stock split. Announce layoffs and more layoffs. Say lower rate of inflation. Strong banks, strong economy. This time is different. So how are these earnings pops doing, you may ask? Well, Meta, sorry Mr. McCall, your positions are still underwater. It's still down big from the recent earnings, as well as the whole TikTok ban pump and dump. When you go back in time to the last earnings from 2023, it's still up from there, but we've lost a lot of that gain as well. And that was when Meta gapped up from like 390 to 450 and change when they announced layoffs, dividends, AI, and buybacks. But that chart is an island reversal pattern, and it should go south to test the 200-day moving average below. Google lost over 60% of the earnings rally already in 2 sessions. Microsoft is now below the earnings pop. Amazon reported after earnings, and it was really a nothing burger. I'll post the real-time chart as of like 5 p.m. I just checked my phone in real time. It's not doing much better. It's just literally doing nothing. Tesla lost 60% of the China robotaxi pop. So they are selling into all of these little rallies. And FOMC and Jerome Powell speaks on Wednesday. I hope you see a pattern here. I believe that regardless of what Amazon reported today, if doves fly out of Jerome Powell's ass, we may regain all of today's loss on Wednesday. Or if it's interpreted another way, that we might stay higher for longer, and there won't be any rate cuts this year, we're going to continue selling off. No matter what Amazon reports on Thursday. Apple reports on Thursday. Unless Apple has invented a time machine or infinite renewable energy, I don't think Apple's going to save the market if Jerome Powell is hawkish on Wednesday. So that's just a summary of today and the session. So what stuck out? Late day sell-off. SMCI after hours on earnings is on the edge of a cliff. It was down like 9% or something after hours. Nothing was strong, okay? Kava was up on my list, 1.93%. The rest were bearish ETFs or volatility. What was weak? I mentioned all the sectors were red, but let's go through some of these names. This is a long list. I'm going to go through it quick as possible. These are all percentages, okay? MicroStrategy, 17.6. BITU, 11.45. Marathon Digital, 10.93. Sweetgreen, 8.40. These are all percents. VinFast Auto, 6.57. Coinbase, 6.52. IBIT, 6.41. Boyle, 6.25. These are all red. BRRR, 6.22. BTCO, all Bitcoin ETF, 6.2. ARKB, 6.18. FBTC, 6.17. You had Kinross Gold down 5.7. Tesla down 5.5. Uranium down 5.42. Bitfarms down 5.2. MGM 5.22. GDXJ 5.18. Rivian 5.12. New York Community Bank 5.02. GDX 4.72. Affirm Holdings 4.61. ACMR Research 4.53, Pan American Silver 4.11, ASML Holdings 4.10, Lyft 4.05, Reddit 3.98, Gold 3.93, Palantir 3.77, ARK 3.7, LRCX, Lam Research 3.7, First Trust FCG 3.69, SMCI 3.54, Zoom Communications 3.51, Red Rock Resorts 3.45, Zscaler 3.41, Restoration Hardware 3.41, Amazon 3.21, GM 3.28, Microsoft 3.21, UNG 3.15, Shopify 3.15, SLV 3.14, Las Vegas Sands 3.04, Sprout Social 3.04. I'm going to stop. I'm not even in the 2% yet. This is all down 3%. This is not you and me selling. Okay? This is large institutions liquidating the crap that they have on their balance sheets, and slowly have been liquidating the Mag 7 on every time it's popped on some kind of garbage news. So that is what's going on. So for free members, Wednesday is FOMC Jerome Powell Day. He will be on the podium. Typically, I've seen the market get held up while he's speaking on the podium, and then once he's done with his Q&A, things get kind of rocky and volatile. So I suspect some volatility in the morning pre-market and a little bit of a dying down of volatility into the lunch hour as everyone is basically on pins and needles waiting for one man to speak. Keep watching tech layoffs and layoffs in general. Keep watching yields. It's still over 4.5%, I believe. I don't want to misquote. Last time I checked it was, but let me just look real quick in real time. We closed the day at 4.68, so still above 4.5. Still a headwind for risk assets. I will see you all after the Wednesday session. Premium members, please stay on so we can go through some charts.